Hello traders, this is the question that I wanted to answer in a short video because I think there's other elements here that I would like to cover that tie into these questions, and it would be easier to do so in a short video versus trying to put it to words and not have it make too much sense. So let's start out by the questions. I have some doubts in my analysis. At the green circled area, would this be a valid long trade? Referencing, is this long trade? Yes. The answer is yes, that would be a valid trade. However, there are a lot of things that are working against this setup. Okay, and I will cover that in a little bit. Let's get to some of the other questions. I see a new structure high with a red marker here. Yes, in the intraday order flow, there is a new structure high from here to here. But in this clear high, clear low, which is the longer term order flow, we did not make a new structure high. We have made somewhat of a retest of this high. Okay, what this means is that this market that was in decline, okay, is stalling and entering some sort of a consolidation range before a possible change in the overall longer term trend, which is encouraging if you're long, but still poses issues, not giving yourself the proper risk reward. And I'll cover that a little deeper in a few. Okay. However, there has been a couple of higher lows in between then and current price, but no new structure highs, referring to these highs and not making a new structure high above this. That is correct. These are called complex corrections, okay, of this swing. And it wasn't complex here, but overall all of this is a complex corrective process of this main swing here, okay? So you have to look at this as a complex corrective process. Now, it should concern you deeply that the bears are actively trying to get in here. There's a lot of selling pressure here. The bulls have not really been able to capitalize and have had a much weaker push up from here into here than we saw here. So the bulls are weakening here, okay, and there's a lot of volume coming down here, okay. So although this is a valid setup, it is a really bad signal. It's a really weak signal because, as you can see here, look at all of the selling pressure that we have here. Look at all of the volume that the bears have been throwing in here, just accumulating, consuming all over this area. And even in this ride up, as you can see, there's a lot of selling that took place. As you can see in these tails, there's a lot of selling pressure, which means that the bulls have not been able to accumulate over what's already been accumulated by the bears. And I know I haven't covered that with you guys. I'm really sorry. I'm trying to find the best and easiest way to put that to a video. And I'm close. But also here, as we can see, there's strong selling. The buyers are really trying to get in here, okay, and the sellers just overpowered their way down here. And this is where we saw the enough buying pressure, enough buyers coming in, as there's a clear area of structure here for them to really put in a better effort and try to come up here. But their effort is just getting weaker and weaker as time progresses. And the volume and the sellers are just with that effort trying to making better price movement, covering more distance. As you can see, look how many candles it took to come up, and look how many it took to come down. Okay, there's a weakening process here by the bulls, and this area right here, as of right now, is expected to hold. Another thing that I want you guys to pay attention to is how the area was defended on previous tests. As we can see, once price broke below this area, I don't know what's back here. Let's assume it's nothing. It doesn't matter. Price came up here, sold off. Price came up here, sold off. Price came up here, really sold off, down to new lows. Okay, that's the market speaking to you. Okay, price is too expensive at this price level. Anybody who sees this knows that at the very least there's going to be some profit taking up here, which is going to cause, and there's going to be also people eager to sell, as we had great price reaction from that level. So this is an area where, price is going to have difficulty getting past, and it's going to find sellers. Okay, and as a result, price came into a deep correction, into an area of structure. Okay, now would it be off of an intraday new structure high like this with great projection? Would you expect price to correct this deep? That's a little unexpected. That also is a telling sign that the bulls have not accumulated enough orders to be able to stop what has been accumulated by the bears. And it's going to be easier for the bears to move price and harder for the bulls to carry price, if that makes any sense to you guys. Okay, so and that's why price has had difficulty in the immediate, has made new structure highs from here to here, but not in the intraday order flow or in the general order flow that you're looking to trade. So although this is a valid signal, although this is a great rotation candle, the obstacles that are working against you is that the bulls are weakening as we speak here, and it's going to be really challenging for the buyers to get past this level. Do you have room to protect? Possibly, but you got to expect that price is going to have issues just getting past this zone here. Where does your stop have to be? What's the appropriate place to put your stop? Below this swing? Below this swing? Okay, you're still working off of this main swing and this complex corrective process. So at the very least, your stop has to go below this low. But even then, the proper swing, the proper situation here is this main swing. This is just a correction, a complex corrective process of this swing. So you have to keep that in mind. Although you may choose to put your signal here, your stop here, just below this low, and if you're right about this process here, it should hold. It still leaves you vulnerable because you're putting it within the context of the main swing that price is trying to correct off of, okay, or trying to push off of, I should say. All right. The last higher low came close to a 100% retracement of the previous higher low. Would we expect price to make a deep correction and continue down, or should we see this as a higher low with the expectation that price will continue up? Well, price is going to have difficulty going up, as we have already identified by the general order flow and bar by bar process here. Do we look at it as a higher low? Yes, it is a higher low because it closed here and the previous low closed here. Okay, so in technicality, it is a higher low. Can we expect price to go up? That is a general expectation. However, because of the obstacles ahead of price, because of the accumulation on the sellers and how healthy the sellers look with the volume here and what they're able to achieve with less candles as the buyers here, you could say that this trade here, although the expectation is for a new structure high, we could say that that is an expectation that is going to be met with a lot of difficulty, and also probably some extensive or even further correction, complex corrections to the downside, maybe even making a short-term new structure low, maybe even retesting this area here before price can maybe find some more buyers, because the people, the professionals that are in this area that are looking to get long don't have room to protect. They know the risk is way down here, so what they're going to do is they're going to wait to see how the bears react here. Now, smart money is going to wait to see how the bears react, and maybe even get short here on a great rotation candle, understanding that the market imbalance favors the bears, and maybe trade into this general area where they can then dump their positions and load up at this level, since we did find healthy buying off of these levels. Okay, we found an attempt to buy healthy off this level. It really didn't go anywhere. It was met with tremendous amount of selling pressure, and that's why the price just wasn't able to continue on to new highs from that point. Then the sellers came in with what even greater amount, consumed all this. Now the bulls have to accumulate all that up again. Okay, so it's going to be hard. So you may find some more complex processes. Price maybe even testing this area here, and who knows, maybe even getting in deeper. So I don't know what happened. This is what we have to work with, but I just want you to understand and know that you can get all that information just from this chart right here. Okay, let's see. So yes, it's expected to go up. However, we see major challenges with that, and they may not even happen. Or would it be correct to look for long trades after price made a higher low, blue marker from the demand area, blue marker. Well, yeah, I mean, that would have been the ideal place, as you do have structure here. And price had spoken in the intraday order flow with a convincing new structure high. This enter here poses the best possible risk reward at the moment of getting long, as your stop would ideally be below here. Great rotation candle. At this point, you would have been at the test of a high. If you follow the rules that I trade by, if I would have entered long here, which I could have seen myself doing, I would have been at a break even here, and I would have survived here, because I would not have been at a break even until price interacted with the zone here, as it did here. So this is where I would have gone to a break even, and then I possibly would have been taken out here. I'm not really sure. Okay, that is the situation. If I just came into this market right now and this is what I see, and I see this here, I would not trade, as I do not have the proper risk reward profile to protect my trade, knowing that price may have challenges just even getting to this area from what I see here. Okay, just because we have an expectation, just because price is making higher lows, doesn't necessarily mean that it's safe to enter. You have to consider the context of time and space, where you're at, who looks stronger, who's weaker, who's achieving what. Okay, and then make your determination whether this is a trade that's worth the risk, or something you may want to just wait for something that's better risk reward. As you can see, price favors movement to the downside. You may get that movement into retesting this area, giving you a better opportunity, a better risk reward at the expectation at hand, which at this point favors, in the short term and in the long term, a new structure high. I say that only because it's unreasonable for price to have reached here. The bear should not have allowed that. However, overall, they've accumulated enough orders to cause a great problem for the bulls in being able to carry price higher. This can cause complex corrections. This can cause price movement to the downside, retaking some of these lows. But price is trying to recover. The bulls are trying to take back this market. Okay, so now that the price has retested a previous high here, it is an unreasonable expectation to expect a new structure low. Okay, you could expect a deep correction. You can expect a retest of the lows, but it becomes somewhat unreasonable, not impossible. I used an unreasonable expectation. Okay, for price to make a new structure low. Okay, but right now the order flow, the accumulation and distribution of orders favors price movement to the downside and difficulty in price moving to the upside. For those reasons, I would need great risk reward, and I would need to have plenty of room to protect my trade, as right now price entering here, you already have issues here, you already have issues here, you have already issues very close to your entry, where price is found selling. You don't have room to protect, your risk is too great. This is a trade that, although it makes sense, you don't have the room to protect, and you need to have that thought in mind as you're looking to enter. Do I have room to protect my trade? Okay, because the number one rule, the most important thing, is to protect your capital. Okay, now under some circumstances you can take an aggressive entry like this, but the order flow has to be the other way around. Price has to overwhelmingly look like the buyers have definitely accumulated more orders over the sellers, and that price is moving up easier than it's moving down. This is the opposite situation, and for those reasons I would probably pass on this trade, as I don't have the proper room to protect, the proper order flow to support taking on the risk, and the risk reward overall in general. Okay, I can tell you that this market is probably going to head down further, or retest some of this area again before it can pick up enough to break up into new highs. And I may be wrong altogether. It may just move up altogether. We don't know that. I can tell you that that's what I see from what has happened here. Now, at the end of the day, whoever wants it more will take price where they want to take price. But it's going to take the buyers to throw a lot more money to stop the buyers, and price tends to follow the path of least resistance. That is all I have here. I hope I have answered that. It's important to always understand the obstacles ahead of price, how price has reacted at those levels. Okay, understanding that price is definitely, has more selling volume than buying volume. And although this looks like a great intraday new structure high, okay, what would you expect from here to here is weakness on the pullback. You did not get that. You got a deep correction. Now in the grand scheme of things, it makes sense. Why? Because you retested a main longer term swing, so you would expect a deep correction. Okay, but had this to support the long here, I would have to have seen, okay, I had great projection here. I needed to see weakness on, even if it came deep, I needed to see weakness. I don't see weakness. I see great volume, great strength. I see the buyers trying to get in here, not being able to do anything until they got down here into an area of structure where you found more buyers. Why did this imbalance happen here? Short-term imbalance, very simple. Area of structure, the shorts took profit, which created the rotation for price going up. Other people saw the market trying to get bullish again, so they felt comfortable jumping in here, and that's why we have this surge of energy that when the sellers were able to come back in, just fizzled out into just more and more selling, and this selling into this buying just completely overwhelmed all of the volume that was here, and another imbalance took place, and boom, price dropped. Okay, so that's it. I want to keep it short. I want to make sure I answered the question. Much more easier to do this in a short video than to type all this out. But I felt it's something that we deal with on a daily basis in the markets. I certainly dealt with a similar situation like this today, and luckily I was able to save my day. But that's all I have, and I hope this little video had value to you. Thank you. Bye.